Welcome back, everyone. Happy Monday. Hope you had a great weekend. Um, I saw Mission Impossible Dead Reckoning. I would highly recommend it, but it is a long movie. It's like literally like a Broadway play. There either don't drink anything or there is a spot at the 1.5 hour marker to go relieve yourself. But definitely a fun family movie. I would highly recommend. A lot of action. But welcome to the new week. Let's jump right in. Today's episode is going to be called the S&P Sharted today, and I'll walk through why in a second. But looking at the breadth real quick, it was predominantly a bullish day. We're looking at basically 642 new highs, only 120 new lows, and 62% were advancing versus 33% declining. Bigger picture for the day, when you look at kind of the industry groups, technology and finance were up more than the rest. And then the lagging industry groups was utilities and telecommunications. And we'll kind of go into that as well today. Lots to cover. So, one thing I want to highlight, although today was a fairly bullish day, um, the S&P SPY or ES lost 50% of the day's gains in the last 30 minutes. That's not a good sign. And as you know, I've been kind of tracking Apple and its intraday movements, and it was very similar to that, where I was like, all right, it looks like it's going to finish strong. Let's see how it closes. And in the last 30 minutes, it just sold off. And Apple, for the past few sessions, um, especially last week, it would kind of start strong and then start to sell off all day. So something tells me that there's some sneaky selling going on. It might be related to the rebalancing of the NASDAQ 100 next week. I'm not 100% sure, but let's keep an eye out on this, right? Like maybe it's just overbought and it just needs to breathe a little bit as far as the indices and Apple and the Magnificent Seven. But taking a look here, Apple closed up 1.67 today. It was weak initially, but then it closed strong. Amazon actually closed down 0.85% today. Google was also red, 0.85 down. Meta, barely even, nothing to write home about, up 0.33. Microsoft pretty much flat all day after printing a doji. The last session, NVIDIA was up along with other semiconductors. NVIDIA was up 2.2%, and Tesla was the strongest of the Super 7, which was up 3.4% for the day. What else kind of stuck out today? Man, Disney, I covered this on Friday's action when I talked about Disney in context of travel and Six Flags. But Disney down again, 3.45%. If Disney keeps falling here, just pulling up the chart, we are dangerously right at that 84 level. If 84 breaks with volume, there's really no support under that. It's going to basically fall until buyers come in and say no more, no more selling, and step into the selling and try to defend it. But look at Disney, keep track of it if you own it. I am not a financial advisor, but if this goes under 84, there's nothing that would surprise me if it went down to like 60 or 50. So just be very careful here. I'm not sure what's going on there, but it seems like a lot of the movies have not been doing well. And the park itself in Orlando seems to be very low traffic for customers right now. So keep an eye out on that. Home builders started red, but closed marginally up. So they defended themselves. Now, DR Horton, which is one of the larger volume home builders, new home builders, they report on Wednesday, and this whole segment has been up very big. I'm going to listen to the conference call, and I want to see what their guidance is and how they respond to some of the questions in the Q&A. But again, when you talk about housing right now, it's basically two separate markets. There's the new home builder market where you walk into a showroom and you pick your lot and you pick your home, where they are offering, as a builder, 4.8 to 5.5 30-year fixed mortgages, as well as like appliances, closing costs. They're using sales incentives to get these deals done as quick as they can. But if you're an existing homeowner and you want to sell your home, you're going to be hard pressed to compete with the new home builders that have all this leverage for discounting. You as a homeowner are going to have to really cut the price to match the rate buy downs, and closing costs, etc. So it'll be interesting to see what happens in the second half of this year for housing, especially like during the fall season before the winter, where predominantly it gets very quiet. Uh, the VIX was actually green today. I can't believe my eyes. Let me just make sure and refresh this chart here because, you know, yeah, it closed up marginally at 0.5%. So it kind of defended itself here today. It's carving out kind of like a little base type of action here. I think it's only going to be a matter of time before something happens to make the volatility spike. Again, if this goes into single digits, I have alerts on my cell phone, my email. I've told my friends to make sure that I'm alive, and they let me know that the VIX is under 10. I'm just waiting. So let me see. What was strong today? AI, ticker symbol AI, was up 4%. PLTR, Palantir, was up a very strong 6.1% today. Zoom, the video conferencing darling from the COVID days, was up 3.19%. But let me just zoom out here of this chart. And, I don't want you guys to get all googly eyed about Zoom info. Zoom info, if you just look at like the last year, it looks like it's, a tech startup that's just about to explode. But come on, it closed at, $72. It was at over $600 during the pandemic. So just be careful. Extreme Networks, they're up a 2.8% today. I actually like Extreme Networks business. So if you've never heard of this company, they're not like a mega cap tech company. The reason I like them is that they are helping large facilities like football stadiums, concert venues, um, it, deploy the most efficient Wi-Fi for their customers. So if you go to a football game in Las Vegas, at their Raider Stadium, which looks like the Death Star, you can get Wi-Fi, right? And they want to make sure that a lot of these venues can offer safe Wi-Fi at reliable speeds, with protection to make sure that it's not hacked, or any funny business goes on with the network. So that is what Extreme Networks does. You could take a look at them, do some research. The ticker is E as in Echo, X as in X-ray, T as in Tom, R as in Robert. So right now it's at $27.50. It's coming up the right side. I would say anything above $20, is safe zone for this company, but it has run quite a bit. If you were looking at a new position here, I would wait for a pullback. But again, it's really running hard right now. coming out of that initiative zone between 16 and 20. So once it left that range, it's just on fire right now. Let's see, MongoDB, another hotly touted tech stock from a few years ago, was up 2.6% marginally. And then what was weak? I got to get into this. So it was really befuddling when I saw Verizon down 7.6% today, because they are a blue chip company. Everyone is on Verizon or T-Mobile for cell phones, and they pay a healthy dividend. Like, I was trying to figure out what was going on. Then I saw T-Mobile was down 6.86%, both at a 52-week low. And apparently, there's a report by the Wall Street Journal that both of these companies may have used lead-covered cables, contaminating many parts of the country. And there's threat of legal action, lawsuits, penalties, etc. But I have to be honest, I'd be surprised if there's anything that comes out of this other than a settlement and a fine. When we have oil companies that are spilling massive millions of gallons of oil in the ocean, and they're just getting fined, why would there be any difference between AT&T or Verizon with lead covered wires? So we'll see what happens. I don't know if this is an overreaction, but that is kind of why both these stocks are down at 52-week lows. Another thing that stuck out on the weak side, the luxury brand house Richmont Group. So they own brands such as Panerai, Cartier, Vacheron Constantin, all like very high-end luxury watch slash apparel type brands. They were down over like 8% in the morning pre-market, but at the end of the session, uh, Richmont Group was down 10.3% for the day. So maybe that's a sign of the high end market right now, but we'll see. My suspicion is that the consumer in general is capped out, but I'm actually pretty surprised that the luxury group is soft. My bellwether or barometer North Star kind of stock for that is Ferrari, ticker symbol RACE. Ferrari's at like lifetime highs, so people are buying. So we'll see what happens. What to watch out for? Earnings this week. There are no Fed heads that are talking this week at all, unless it's going to be uh, a surprise type of discussion. But looking at the calendar for earnings, Tuesday morning, tomorrow, you have Bank of America. If you're listening to this on Tuesday morning, this morning, you have Charles Schwab, Morgan Stanley in the morning, and then in the afternoon, a couple regional banks like Hancock, Fulton Bank, and then Wednesday is like the meat of some of this. And after hours, you have Tesla, Netflix, IBM, Alcoa, Sands, Las Vegas Sands. And then Thursday, pre-market, you have Blackstone, DR Horton. Oh, did I get that wrong? I thought DR Horton was Wednesday. I could be wrong. I don't know if they report on Wednesday and then have the call on Thursday. I'll have to double check. And then you have J&J in the morning, and then in the aftermarket you have CSX, and then Friday you have American Express in the morning, and then you also have IPG, which is important name for advertising. They're a media agency, and you have AutoNation in the morning, which obviously is one of the largest chains of automotive dealerships. So there's some activity here. But next week is going to be the all important FOMC decision for rates on Wednesday. Thank you again. If this is your first time joining the podcast, I really, really appreciate your time to check this out. Please subscribe to the Substack, nyugrad.substack.com. You can also find me on Twitter. The Twitter handle is just NYU Grad Substack. And if you have any ideas or feedback, feel free to email me. My email is nyugrad@protonmail.com. Even if it's something that like you think is bogus, you don't like something, I would love to make changes, because this is, at the end of the day, it's for the audience. And also want to thank Deneve, who sent me a nice note saying, really enjoying the format and the vibe, going to pair it with my morning coffee routine. And that's, thank you for that comment. It really means a lot. That's actually the reason why I'm doing this format. I feel that you can cover the day session in less than 15 minutes, or about 15 minutes, and not go through the weeds, to just look at the macro lens of the forest and a little bit of the trees. But I will have other formats where I'll go a little bit more deeper dive into specific equities and companies, and maybe start to invite even the subscribers and special guests. So thank you again, and have a great day, and I'll see you in the next episode.